Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Lanny Burt, the Dividend Diplomats. Fortunately, this one's not going to be a fun video. We're going to talk about the next stock in my portfolio that I think is going to cut its dividend. Even worse, this company is a Dividend King. See which company's dividend is on the chopping block after they issued terrible guidance.
I smash that subscribe button before we get into this one. Like this video because we're reaching the millions and millions of dividend investors out there, guys. Let's get this to 350 likes today. 350 likes for 350 knives of dividend cuts that we might be falling on here on this 51 plus year dividend growth stock.
That's right. We always invest with the intention of buy and hold forever, and not just buying and holding, but also seeing a dividend that's going to grow forever. At least that's the best. That's why our screener has the metric, third metric, the dividend growth history, where we talk about that average rate and how many years they've increased it. However, as we all know, stuff happens sometimes, right? Ask AT&T who cut their dividend. Ask Intel. Ask any company. There's a whole laundry list of ones. Sometimes things change and companies unfortunately cut their dividend, and that's where we are right here.
You know, and Bert, we're doing the Hogan leg drop here with Luggett and Plot. Guys, it's all about the leg drop right now in this company because they're down 41% this year. And Bert, I know that they just released earnings. As well as guidance. But earnings, real quick, guys, revenue is down 7% Q4 to Q4. Year to date, sales were also down about 8%. But they're still churning about $4.5 to $5 billion worth of sales. I mean, they're still churning cash flow. But their issue is here, though, is volume is down. So the amount of product that they're selling is down. And I think they would do very well if the Fed did end up reducing their interest rates, by midpoint this year, maybe one, maybe two cuts, because that might spur up consumer demand, for bedding, transportation, because Leggett and Plot has their hands in those areas.
Yeah, and management is doing everything they can to fight to keep the dividend afloat while the Fed potentially cuts the rates. When we talked about them last year and we talked about them early in this year, they don't have debt due until the end of 2024, end of 2025. So the hope is, to your point, Lanny, sales rebound, cash flow starts churning upward before that big debt payment comes due. And management has to make that tough choice between paying back the debt or potentially refinancing that debt at a higher interest rate or cutting that dividend. That's the tough thing that's happening right now for Leg.
That's the tough thing. And I know you and I, we were joking and we don't want to see it or hear it, but, do layoffs, are they in the near future for Leggett and Plot to kind of, stop and limit the cash flow there and the expense? Because Bert, they released 2024 guidance. And what is this looking like for the good old Leg?
Not great, Lanny. It wasn't very great. You said that there was a sales decrease last year. Guess what? They're forecasting a sales decrease again. They're already saying 2024 sales are going to be lower, down 2 to 8% compared to last year. That's terrible. Earnings per share are going to be even worse too. EPS 95 cents to $1.25. Adjusted EPS $1.05 to $1.35. Not great. Both of them are down. So we're already off to a bad start. I guess the one positive thing is they're expecting the dividend payments to remain the same. So as of today, they're not forecasting a decrease in that dividend, which I guess is a good thing. It kind of supports the whole waiting till the last possible second to have to cut that dividend plan.
Yep. You kind of said it early on. It seems like they're trying to hemorrhage everything they can before cutting the dividend, including minimal acquisitions, reducing share repurchases, though I know you've joked about, hey, this is a pretty good time at $20 a share to start buying back that stock.
Yeah.
But hey, cash flow right now is king and they have to probably use it elsewhere.
Yeah, it's tough. And this hasn't been fun for me to watch. And that's kind of why we're here, because I had a large position and I talked about the end of last year, this year, how I was buying the hype that management could hang on a little bit until sales rebounded. So I started adding, I started nibbling and growing that position to over 230 shares. In fact, it's to the point now where I'm dripping 4 to 5 shares. I'm receiving almost $100 per quarter from getting plot if they don't cut that dividend. And man, it's just been frustrating to see that they haven't been able to catch a break since I started adding a few weeks ago. It's just been infuriating. No, not a few weeks ago, a few months ago. It's just been infuriating that the sales haven't rebounded. And I'm once again staring another dividend cut in the face when I didn't expect it.
Yeah, so the writing is almost on the wall. And yeah, we have seen this a few times, Bert, where management said, oh, yeah, we're doing everything we can to maintain the dividend. But more times than not, that usually is not the case.
Yes.
But we're
So
going to run legs through the Dividend Diplomat stock screener, guys. So get your pen, get your paper handy. It's the three metrics: price to earnings ratio less than the S&P 500, dividend payout ratio less than 60%. That's a funny ratio right now. Third, dividend growth, the history of growing dividends. And Bert, we always throw in and trickle in what is traditionally the cherry on top with the dividend yield.
that's right. So let's jump right in. Their price is 2046 after dropping 12% in one day after the guidance. We're going to use EPS of $1.20, which is right in the middle of that adjusted EPS range. That gives you a PE ratio of 17. So not the cheapest, because as the price falls, so does earnings. So the PE, you don't get any benefit from a really low PE ratio here.
They're just ratcheting down together in sync, guys. Here, this is not one where it's an accidental undervalued stock.
Okay, sir.
Dividends they pay $1.84. So earning expectations are $1.20, and they pay $1.84. If you do the math, we're looking at 153% dividend payout ratio.
Hang on for dear life, we'll get in plot, because they've increased that dividend for 51 years. They are a dividend king. Their dividend growth rate's 3.94%. And I mean, sure, they increased it last year, but I'm not expecting any kind of a dividend increase anytime soon from leg until things
Take
get
a
better.
note, take a page, look at and plot. If you're watching the video,
Yeah,
don't do it.
please.
Do whatever you can, but if you don't increase it and you break your streak, that's okay. Or if you want to do like a half a cent or something like a quarter of a like you want to do
That's
1/8 of a cent, by all means, go
that's
ahead.
the Exxon Mobil plan when they were going through some stuff. So now that their price has fallen so much, their yield is a juicy 9%. So that's where Leggett and Plot kind of stands. So to summarize it, 17 PE, buck 53 payout ratio, 5-year dividend growth at 394, 51 years of increasing, and 9%. I don't know, Lanny. Where am I thinking? Where's my head at with this? Just hold. I'm going to keep dripping. If there is a dividend cut, it's probably already priced in. You might as well wait and see what happens. And I think the important thing is you don't have to make a decision. If debt doesn't come due until the end of 2024, management does have time. They do have time to wait and see if sales can rebound before they have to make a dividend decision. And might as well hold on at this point and just see.
Hold on.
Yeah.
Yep. So I'll also be dripping shares. If there were to be a dividend cut, let's just say, maybe somewhere around like 90 cents to $1 per share, I can see them kind of bringing it down to.
Yeah.
But we're not here to be crystal ballers over here, guys. What would you do with Leggett and Platt? What are you doing with Leggett and Platt? Are you actually buying more? Come on, who's crazy out there? Let us know in those comments below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, if you're not with us, you're against us, Jack.
That was Bert, the Hurt Man, and Lanny from the Dividend Diplomats, over and out.